Here we are with a change in non-farm payrolls of 638,000, a little bit better than we saw in the consensus forecast, but not as good as the prior month of 661,000. We'll have to look for the revisions there. The unemployment rate declines to 6.9%, a notable drop. That is down from 7.9%, a full percentage point drop during the month of October. So it looks like a lot of people who were off work because of COVID have now regained employment, although we've got to check and see what happened here in terms of the overall number of people who were employed and in the labor force. I'm looking for those numbers. I'll get that for you in just a second. Labor force participation rate improves by 0.3 of a percentage point to 61.7%. That could also be considered good news. More people into the labor force here. The number of people who worked part-time for economic reasons increased, however. That is not the best news. Now, we also want to look at the unemployment rates for major worker groups, and it is 6.7% for men and 6.5% for women. For whites, 6%, 10.8% for blacks, 7.6% for Asians, and 8.8% for Hispanics. As I go through the numbers here, we can look and see what's happened at the establishment numbers. Job gains in leisure and hospitality increased by 271,000. So it does suggest that a lot of people in the bar and restaurant industry went back to work. Retail added 104,000 jobs. Now, we do get a little bit of Christmas hiring in the month of October, and we also get some of the retailers who may have been closed coming back. So that may have added to that. Construction, 84,000. That's the biggest number in quite some time. And it is good news because we're seeing a lot of housing construction, and they had been, it appeared, finding difficulty. And one more, Tom, here, manufacturing up 38,000 on the month. It's still 621,000 jobs fewer than we had in February, but moving in the right direction.
Mike, I'm going to give you 12 seconds to dive further into the data. John Farrow, you've got to do a data check. You're doing it better than me today. I'm too tired. Look at the 10-year yield, John.
Yeah, that's the move. That's where the bounce is. The long end of the Treasury curve, front end pinned, anchored by Fed rates. Long end is where you get that pivot. Think of the front end as the hinge, and the long end just pivots on that. 10-year yield up 3 basis points to about 80 basis points now in the 10-year. Price action elsewhere pretty muted. Equity futures with a tiny bounce, still negative 21 on a session, and the dollar still very much weaker. But that's the story into the bond market, Tom. Where's the momentum in the labour market? Is it still there? What's the outlook look like? The outlook for growth, for inflation.
That's right where I wanted to go. I do want to add, John, with the movement in the bond market, I think we should see the real yield this afternoon. Michael McKee, what is so important here is off the shock of this pandemic, are we in noise or are we in trend? Can you delineate a trend? There it is. Can you delineate a trend out of 2 or 3 months data, or is it still pandemic noise?
Bartender, give him another.
Thank you.
At this point, it's not
adding
noise.
To the labor market.
It's very hard to discern a numerical trend in terms of we're going to keep seeing this kind of increase or that kind of increase, although obviously we have slowed in terms of growth, but we are picking up jobs as the economy reopens. Now, the problem is we're still very much below, and I haven't done the math, but we're still very much below where we were in February before the pandemic started. We were something like 10.5 million below, so maybe we're somewhere around 10 million jobs fewer than we had, and so you've still got a long way to go before a lot of people get jobs back, and that leaves us in the position of still needing some kind of stimulus. Let me point out that the number of people in the labor force did rise by 724,000. So the number of people who were employed is greater than the number of people who were unemployed. And so the unemployment rate change is a solid, good news number.
That's where I wanted to go, is the unemployment rate drop. The fact that a full percentage point decline in the unemployment rate was achieved in 1 month. Is this repeatable? Does this fly in the face of people saying that this labor market is decelerating dramatically and that we've seen the bulk of the gains so far?
It's repeatable. We just don't know if it will be. Part of the problem is we don't have a very good handle on how quickly employers are bringing people back and what their outlook is. Now, we know, because there's still maybe 10 million people unemployed, that a lot of people may have lost jobs permanently, and I need to check on that number. But the situation with the jobs is so unusual. We've never had this before that it's hard to say what kind of actual trend we're going to get in this area. If companies find that they can hire people, then we may see it continue to go down. But then again, you've got offsetting factors like winter coming, so our restaurant's going to keep everybody on the payroll if people don't want to sit outside. Let me give you the job losers. The people who were on temporary layoff dropped by about 1 million during the month, while those who are permanent job losers also dropped. So we're seeing some good news in the overall employment trends. We just have a long way to go to make up the hole we got into. And we should mention the number of people who got jobs. We lost 147,000 jobs at the federal level because census workers are now going off the payroll. So if you want to figure that in, I mean, you'd have to subtract what was there before.